Market conditions still remaining bearish, majority bearish at 14 on the daily time frame for S&P 500 and 14 on the 1 hour time frame for S&P 500. We are certainly extended to the downside, seeing the 1 hour time frame really extended on trend. Seeing futures up here slightly this morning, which is shifting this trend here a little bit, and we're deep enough into this corrective zone. We're sitting right at the 618 retracement that we could see a bounce. We're also sitting right on top of this demand block where we have been at before, really from last fall, this most recent counter trend from August, September. We're back to those locations here, and we'll see if we do get any kind of reprieve in the market from all of the selling. We're continuing to see weakness in the overall breadth, sitting at 25, meaning that 25% of stocks are above their 50-day moving average in the S&P 500. That means 75% are not, and we're seeing that majority bearishness continue after a pretty tight compressed trend taking place right here, where we get that compression of trend. That's now starting to get that expansion of trend, working our way this direction towards some of these oversold ranges. This last sell-off that we had took us down to the 20 range, and we got a bounce from there. It can go as low as 10, so we're not seeing real deep breadth sell-off in terms of the majority of S&P stocks that are continuing to even move lower, but that is certainly approaching that level. It wouldn't only take a couple more days, more than likely, to pull a bunch more stocks underneath that 50-day and continue to see some weakening on breadth overall. Also seeing some softening here on volatility on the VIX. We're seeing on the 1 hour time frame starting to see that trend start to compress. Also in correspondence here with futures, where we're starting to see that price activity, or even S&P 500, we haven't seen that move back in yet, but we're very wide right here, and in volatility, we're starting to see that compress a little bit. So there may not be quite as much put buying in S&P 500 as there was back just even a few weeks ago, which means that there may be some of that selling pressure may be drying up. Market conditions may be starting to get a little bit more clarity on the craziness that we've got going on with tariffs and Musk and everything that's happening in the news is, it may or may not be affecting the market. More than likely, it's going to be the bigger picture and the interest rate scenario and the inflation scenario. But the idea of massive tariffs and fighting with tax and tariff, that's going to it's got the market spooked right here at these levels, but could be seeing a little bit of support right here. We're seeing SHY short end of that yield curve continue to be mild, majority bullish at 14, trend compression starting to expand, and TLT, which is that long end of the curve, still in that bearish downtrend, starting to shift a little bit back more to the upside here. We're seeing majority bullish at 9, but really compressing still within an overall downtrend. So we could see this come back up, compress, and then start to expand again, which would mean higher interest rates. And we'll see if that trend pans out. We're seeing majority bearish on rates on 2-year, seeing that compressing, starting to fan out. A little bit of bullishness here shorter term today. At the 10-year note, also seeing a little bit of bullishness here in the shorter term, seeing it rally back up just a little bit, and some compression of trend. Still with some bearishness, but you can see that overall it's maybe trying to fight for a little bit more upside. That could be mean some higher rates, but as of right now, continue to see that overall majority bearish in rates on that 10-year. Diamonds, Dow Jones Industrial Average, majority bearish, again deeply oversold. 1 hour time frame really expanded here. It has broken down. All markets right now sitting right around the bottom end of that corrective zone. That corrective zone is that 382 to 618 support range, and we've just slid right through that, as well as slid right through this entire. It was a demand block. Now it's a supply block. It's overhead resistance. There's enough selling from here and here to push it all the way through these areas. That's significant selling happening here on the Dow, and we're seeing that majority bearish. Again, in the shorter term, we could see a bit of a bounce that may push things back up out of some of these oversold levels. Triple Qs also showing that same type of pattern, sitting right at the 618 support. If we start to see markets continue to break this down, then again, our models are still at 90% cash, so heavily weighted towards cash in these market environments where we're starting to get the majority bearish across the board, and seeing weakness across the board on the weekly time frame as well. Let me go over gold, Russell, and oil and gold, and then I'll go back to that chart as well. We're seeing the Russell which is your small cap names. It's been weak really since the market top. It didn't retest those highs like the other indices did, Dow, S&P, and NASDAQ, and that is a risk-off type of trade where we're seeing small caps moving lower, aggressively lower. They typically lead bull markets, and they also are typically the first to be sold off as well. So continue to see that trend in place. USO finding some support right here, or attempting to, at least in the shorter term, some resistance areas, but it's kind of floundering right here at these levels, and it may do so at an area where we could see some demand start to come back into oil. Gold having a nice pop yesterday, another breakout, new all-time highs, expansion of trend happening on gold, seeing that move as a flight to safety, as we're seeing again a little bit of uncertainty taking place in economic conditions. SLV also following suit with that move. And let me come back to the S&P 500 and look at that weekly time frame with this perspective now. We're seeing majority bullish still, but 8 and 6. So we're seeing pretty aggressive downturn here on the weekly time frame. That's a pretty significant move going back to our last bear market where we started to see some of those cracks in the trend. This is where that starts to happen, is after the expansion area and a couple of little hiccups right here. And we're starting to see that last week and this week as well. And again, with this perspective, you can see that it's still relatively early in the trend. Great location, great time to be making adjustments if needed in terms of raising cash or making any kind of adjustments that you may need to make in terms of market conditions. Let's jump over and look at a couple of stock ideas today. MGTX showing up in the scan, big earnings, big confirmation move, massive volume breaking out as well. Sometimes those gap trades are a little bit tougher, but there's definitely confirmation there, trending, moving into that location that we want to focus on. The other trade I wanted to take a look at was on SSRM, a mining stock, a little bit deep into that trend already. We want to see ideally this first one. We get trend compression and expansion and the first pullback. This is really the second pullback on that, but that's still a tradable location at the 236 and potential opportunity there in the mining names as we're seeing gold and silver continuing to move to all-time highs. These guys are going to be having some nice profits on their mining efforts. That'll do it for today's update. Everyone have a fantastic day today.